Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at inverted hammers and shooting stars. So an inverted hammer is, well, it's an inverted hammer. It's an upside down hammer. It's just this, nothing special about it. And you should probably be able to guess what the whole point of an inverted hammer is. And a shooting star, just like in the last video, we have the same pattern, or we have the same candlestick shape. It just depends on where it appears. And again, think about what's going on. The buyers come in and they fail. So an inverted hammer will happen in a downtrend. So what happens if you're selling off and you see an attempt to rally during the trading session and it fails? Well, it tends to have people believing that the downtrend is going to continue. But on the next candlestick or shortly thereafter, what happens if the market breaks above? Well, what happens is everybody's short and something's changing. That means people are going to be buying back their positions, covering their short positions. Stop loss goes on the other side of the candlestick and a buy order goes on the top of it. You know, a lot like your hammer, your hanging man is just upside down. So in this case over here in the shooting stars fall, so it should give you a hint that it's a bearish candlestick. Nonetheless, it happens in an uptrend. And during an uptrend, as you're grinding away higher, what you expect to see is more of the same, right? Well, in this case, the market's going higher and higher. And then one day or 1 hour or whatever, it forms this candlestick. And what it shows is the buyers ran out of momentum. If the market breaks down below the bottom of this candlestick, then you have a situation where people might start losing money that are hanging on to the asset. It becomes very negative. Stop loss goes on the other side, just like the other candlesticks, and you let it rip. So let's take a look at some examples. Over here, there's a nice shooting star on Polygon. There's actually one here as well, but this one's even prettier because it's got a longer wick. The longer the wick, the more impressive it's going to be. You could call this an inverted hammer. It's a little bit of a stretch, though. There's an inverted hammer. There's a perfect one, actually. But look at this. Right at support. Break the top of it. Put a stop loss here. You aim for resistance. And that is exactly what you get. Do what Arbez say. Shooting star. Break down below it. It threatened a couple of times and then break down. Shooting star. Break down below the bottom of it. Pull back to support and then bounce back. Inverted hammer. Stop loss here. Take the break there. Does pull back a little bit, but eventually goes higher. And think about what that tells you. It tells you that the buyers are starting to really force the issue because, you know, initially they got beat back, but more and more people are coming in to pick the market up. And let's see, Cosmos. Shooting star, nice drop. Shooting star, it's a little bit, the body's a little longer than I'd like to see it, but it is telling you the same story. Hammer. Shooting star, but not after a big move higher. Not a huge surprise that we just kind of came back into the picture. Shooting star pulls right back to the previous support level, and so on. Here's an inverted hammer that has not broken to the upside, at least yet. This candlestick is still forming. We'd have to wait and see. But ultimately, these are great signals that a lot of people pay attention to. In the next video, I'll add some things to potential signals from shooting stars and inverted hammers and show you how this is done in the real world. Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at some examples on scalping with inverted hammer and shooting star candlesticks. So the first one, and actually it's a pair that I'm going to bring to your attention. That's kind of a neat setup actually with Cosmos. Shooting star, shooting star. Well, what else is that? That's also a double top. So I like that a lot. You can take the trade either from the shooting star to aim for support on both of them, or you could take the totality of the setup and trade the double top for a bigger move, or a combination of the two. Really, there's a lot of different ways you could have approached this. You can see that we broke down below the 20 moving average here. Let me go ahead and make these disappear real quick. Let's go ahead and take a look at ACD. Where are you? There. So over here, you can see we had crossed and started to drop to the zero line. Over here, we had crossed, although we were not necessarily screeningly oversold, but we were overbought, but we were overbought. Pretty straightforward setup. Nice double top, nice double shooting star, however you want to look at it. It all kind of came out the same. Those are the best trades, quite frankly, because it means that single candlestick traders are paying attention to it. MACD traders are paying attention to it. I'm going to guess, I didn't even check it, but I'm going to guess and say that there's probably a fib involved here as well. Yeah, the 61.8. So there's a lot of different reasons to think that people would be involved in the system they're using. Doesn't matter as much as the fact that they're with you. So this is an inverted hammer of sorts. I'd like to see it a little bit lower, but I would call it that. You could also call it what is known as a doji, almost in the evening star, or morning star, excuse me, which foreshadowing, we will see that in a moment. Almost a harami. I mean, there's a lot of different things you could call this, but clearly this is an area that has been important. And the fact that we couldn't continue to fall and then got the breakout and the cross afterwards, very interested in those types of setups. Shooting star. It's actually what is known as a gravestone doji. It's the same thing. Shooting star after a very shooting star-like candlestick. Nice cross just after it. So how would you play this? In theory, you could short at the bottom of this candlestick, but in this environment, with two of those in a row, a lot of times, this is me personally, I like waiting until the entire two candlesticks are broken. So you could have shorted there, right at the cross. Either one would have worked out. Really doesn't matter. Here's an inverted hammer that did not get triggered for a while. Same thing here, but it was kind of giving you an idea that something could have been up in the market. Here's one that, there's your stop loss. There's your entry, and it was very noisy. You almost got taken out. MACD cross right there. Moving averages were pretty far from them, so it shows that maybe we're a little overextended. Go ahead and take a look at a couple other examples. Go ahead and zoom out a little bit. This is about as perfect of a shooting star as you get. So we shot straight up in the air, ran out of momentum, started to drop. And it's probably worth noticing we started to drop in the MACD before we actually started to drop here. So it was a little bit of divergence. Nothing to get overly excited about. But I like to see them when the market is just way overdone. You can see it's a little bit of a double top. Where could you have gone? Well, you would assume that you're going to come down to here, and you did form a hammer there, so that would have been a signal to either buy or get out, to not be short is basically what that signal is at the end of the day. Here's an inverted hammer straight up to the moving average and then straight up to this little area here. That also coincided quite nicely with the 50 EMA. So you can see that, crossover was a couple candlesticks later, and that's when we really started to see a lot of momentum. And, a lot of this is a certain amount of artistry. You do want other things helping you along. Support and resistance is by far the most important thing. But, also things like fibs and moving averages can be piled on to the equation as well. As foreshadowed earlier, I'm going to take a look at Morningstar and Evening Star candlesticks next.